back on Morning Trade Live. Let's focus on Apple. Multiple analysts pointing to a potential new product launch later this year. More on that in a second with Marley, who's back with us. The stock is moving higher along with the overall market today, but has experienced some weakness to start 2026. The stock is down 5% this month and more than 10% from the all-time high of $288.62 a share from December 3rd of last year. There's Marley. Hi, Marley. Welcome back. Thank you so much for joining us. We really missed you. Obviously, this is the focus of the morning trade. Hard to gauge the reaction when we're seeing some risk appetite, particularly for tech again today, but it looks bullish. Just walk us through the notes.
It looks bullish, and both of the notes are bullish, despite one of them being a price target cut. It's just about the timing, really. It's still a bullish note. So let's go first through this bullish Morgan Stanley note. They released the results of their AlphaWise smartphone survey, and it's extremely bullish. They're saying that it's showing that there will likely be an average selling price growth situation for Apple moving forward, and also says that Apple is expected to be the only major smartphone vendor to take share in 2026. Their switching rates also should be improving to about 5-year highs, according to the survey results. Those are supporting what the company says is their bullish fiscal year 26 iPhone shipment forecast, who notes that the firm remains 3% above the consensus in terms of its fiscal year 26 iPhone revenue forecast. For fiscal 27, they're about 4% above the consensus. That implies the strongest 2 consecutive years of iPhone growth in more than a decade, if they both prove to be true. And just for some perspective, Apple generated about $435 billion in revenue over the last 12 months with a 10% growth rate. So that says that they're supporting that bullish outlook because of that as well. Additionally, the survey showed that 27% of iPhone owners are, quote, extremely interested in a foldable iPhone, which they view as a bullish takeaway. They kept their overweight rating and a $315 price target. So some significant upside from the $252 they're trading at right now. The survey also found that consumer perception of and willingness to pay for Apple Intelligence, though, is deteriorating year over year. But that was the only negative that I really found in all of the survey results. Now, as for that price target cut, it came from B of A. It's just from $325 down to $320. So a $5 deduction, but still, again, more than $70 off where we are right now. They just lowered that price target, keeping a buy rating here. They said that their checks in Asia suggest that foldable phone that Morgan Stanley was saying many are interested in will likely come out in 2026, some point this year. Conversations with supply chain suggest that it will launch likely in that usual September release timeframe. But the base model Air and that E model, they're saying, will likely launch in the first half of 27 based on their supply chain conversations, likely in March. Now, because that is a staggered release, they're adjusting their estimates to reflect that staggered launch and associated gross margin changes. So that's why they have this $5 deduction. That $325 price target that they reduced by $5, they only bumped up $5 about a month ago after they reported earnings. So not a huge change here, still bullish from both B of A and Morgan Stanley. They just said their supply chain checks are indicating that it might be a more staggered launch without everything coming out in September.
Okay, good look at Apple there. Currently trading up 1.7% alongside its other Mag 7 cohort. But just sort of thoughts on the overall market. I mean, it looks like we're getting a bit of taco trade vibes this morning. Charles, just walk us through your thoughts here.
Yeah, and you know, when we come to the taco trade, it's usually pretty darn good for the markets for at least a few days. Now, there's, unfortunately, a lot of news, a lot of disputing of, what President Trump had said from Iran. But, President Trump has actually come back this morning and reiterated what, he said initially this morning to make the markets jump. So it's kind of a wait and see. It's still an extremely difficult environment to have risk on for more than, 24 hours. But, at some point in time, you got to make that decision and try and take advantage of the volatility. This is a market that's trading in all directions, up, down, sideways. And, even intraday wise, after this big jump, we've kind of gotten flat a bit from, the opening bell. We'll see if we could actually continue to extend. But, this is a market that's keeping everybody on their toes. And I still, will tell traders to remain vigilant. Don't be too based in one direction and be very flexible in trading, both up and down right now, because that's just kind of how the markets are going.
Yeah, it seems like a market that really just wants to rally, so sensitive to any headline, but we do need to see those words turn into reality, so stay nimble in the meantime. Thanks so much, Charles. Really appreciate your input. Charles Moon there, stock strategist at Prosper Trading Academy.